what is going on with Stretch right now is, I think, that the most talked about topic, one of the most interesting topics in finance right now. 11.5% backed by the biggest Bitcoin treasury in the world, 760,000 Bitcoin now. Last week, with the proceeds from last week, now we're waiting for official announcement, but we estimate that there's roughly $1 billion that come from Stretch, or it could be less, it could be more. Um, that is a lot. Like, and especially with these Bitcoin prices that are low, it looks like the machine is going to be accumulating at good prices that create a huge setup for a long term. So please give us your take. Please give us your analysis. Also, would love if you can. Right now we have 1,600 people watching this. If you could explain what Stretch is, like, if you could give us an explanation and then your take on this whole mania that is happening right now, which is incredible to see.
Bitcoin is digital capital with 60% volatility and 60% annualized return potential. And the Stretch is close to 0% volatility and plus 10% annualized returns as digital credit, and digital credit being the form of transformation between the digital capital, which is the raw material, Bitcoin, and digital credit, which is the transformed, distributable, scalable product for Bitcoin adoption for 99% of the population that cannot sustain the volatility of Bitcoin, but wants to get some of that exposure. And for those that were at Strategy World, they were already noticing the power of the product market fit of Stretch for investment banks, for corporations, and for many investors. This is the word that was on everyone's mouth, and this is transforming credit markets at a pace that nobody except Bitcoin maximalists active in traditional markets knew that Stretch has really the power to conquer at a pace that will surprise a lot of analysts the credit markets, because it completely changes the risk return profile of the different instruments out there in the market. And today, the announcement, they just made it, and it's quite impressive. It's more than 1 billion coming out of Stretch itself, 1.1 or 1.2 billion out of Stretch, and 300 million or so from the Strategy ATM. So that's really the first time that we see Stretch accumulating orders of magnitude more Bitcoin than Strategy's ATM, which is extremely transformative and shows, number one, that the MNAV is likely to go higher because digital credit is amplifying digital equity, and digital equity powers back the potential for digital credit again. And that's the first observation. The second one is that this in and of itself is accelerating the growth of Bitcoin itself, given the market structure of Strategy being buying 6x the offer that is being provided in the market by miners of Bitcoin. And the third observation is that all actors in the Bitcoin capital markets are benefiting from that as well. I saw that you at Roxom are providing now, are going to provide, I guess you already started, access to Stretch. And on our side at Capital B, nobody has, like 3 to 6 months ago, nobody was really talking about those types of products in traditional markets. And now everybody is curious and everybody is discovering that this is here to stay. And everybody is coming to the second order effect that there is a strategy type company in Europe, which is called Capital B, and which is positioning for that future as well, and positioning as an early stage strategy for Europe to take the opportunity of digital credit over in Europe. And so Stretch is the best product market fit we've seen in the Bitcoin treasury company world, after the equity itself, of course. And this is going to really have a lot of second and third order effects in the Bitcoin treasury companies, because each Bitcoin treasury company will now be able to show to traditional investors the success of that product and how this could also be extremely transformative for their own market.